NVIDIA management broke precedent by extending revenue visibility through fiscal 2028 with 70% growth projections. But while primary AI compute leaders thrive, hardware supplier stocks like Marvell faced sharp post-earnings drops over margin mix and Google TPU warrant dilution. Tonight, we analyze how multi-year hardware demand and supplier re-ratings are reshaping portfolio positioning across the market. In an unprecedented move during its earnings call, NVIDIA provided revenue guidance stretching into fiscal 2028, forecasting approximately 70% growth for the coming year compared to Wall Street consensus of 40 to 45%. Chief Executive Jensen Huang emphasized that customer demand far exceeds the 70% figure, with current growth rates limited strictly by supply chain capacity rather than market appetite. Underpinning this long-term growth is NVIDIA's next-generation Vera Rubin platform, which has entered full mass production. Systems are already deployed at cloud partners, including Google Cloud, Microsoft Azure, Oracle, and CoreWeave. Management expects Vera Rubin to become one of the fastest product ramps in company history, contributing roughly 20% of data center revenue as early as the third fiscal quarter. However, rising component costs are beginning to impact hardware profitability. Storage and memory price increases have outpaced earlier projections, creating direct margin pressure. NVIDIA expects fourth quarter gross margins to moderate to between 71 and 72%, stabilizing around 72 to 73% in fiscal 2028, as the company adjusts product pricing to absorb memory inflation. Over in custom silicon, Marvell Technology reported record fiscal second quarter revenue of $2.739 billion, up 37% year-over-year, with earnings of 94 cents per share. Despite topping consensus estimates, the stock dropped 7% post-earnings as investors took profits following a massive year-to-date rally and scrutinized near-term margin mix. A key factor weighing on Marvell sentiment is the commercial agreement announced with Google. Marvell granted Google warrants to purchase up to 58.97 million shares at $206.58 per share, tied to $500 million revenue milestone tranches through 2033. While cementing custom TPU silicon partnership, the structure introduced long-term dilution concerns among equity holders. Evaluating valuation metrics across tech leadership, NVIDIA is currently trading at a trailing price-to-earnings ratio of 28.2. Remarkably, this places the high-growth AI leader at virtually the same earnings multiple as mature consumer staples like Coca-Cola at 27. This calculation suggests that rapid earnings expansion has kept growth-adjusted valuation grounded despite historic stock gains. In asset management, Vanguard launched 3 new global tracker ETFs, featuring a flagship global all-cap fund, charging just 7 basis points. This represents a 70% fee cut compared to Vanguard's legacy 0.23% all-cap index fund. The aggressive pricing highlights ongoing fee competition among index providers, defending retail market share against low-cost rivals. On the fixed income front, U.S. 10-year Treasury yields hovering near 4.7% present a competitive benchmark for equity investors. With broad index earnings yields offering minimal spread over treasuries, portfolios face a strategic choice between guaranteed nominal yields and equity returns exposed to multiple contraction risks under high federal debt loads. Adding to fiscal policy debates, legendary investor Stan Druckenmiller publicly criticized Treasury Secretary Scott Bessent's use of Treasury general account cash and off-cycle buybacks to influence long-term yields. Druckenmiller argued that suppressing long-end bond yields removes the primary market discipline checking government deficit spending. Macroeconomic data continues to reflect a two-speed economic environment. While capital income and tech sector wealth remain robust, median and lower-income households face tightening conditions. Credit card and auto loan delinquencies among lower-income brackets have risen toward financial crisis levels, signaling persistent consumer stress beneath aggregate GDP figures. Analyzing long-term currency dynamics, economist Daniel LaCalle noted that global fiat reserve currencies are confronting structural debt and fiscal limits. In response, stablecoins are emerging as an essential transactional bridge, connecting traditional fiat banking rails to decentralized digital reserve assets. To wrap up today's analysis, NVIDIA's 2028 guidance confirms that core AI compute demand remains supply-constrained over a multi-year horizon. However, supplier margin pressures and Treasury yield dynamics demand selectivity. Investors should maintain core exposure to high-visibility compute enablers while monitoring valuation re-ratings across supply chain partners.